So I'm favoring a retracement down into 14,791.75, which is 50% of this dealing range currently, and then we pop back up. Now there's a tiny 3-minute gap in there. We could fill down. It's 4-minute gap. We just tapped into the 4-minute gap. I want to see this left as a breakaway, partially because if you look at the 3-minute, you have a clear old buying group right here. We reversed after sweeping out this short-term sell-side liquidity. Okay. So I want to see it candle bodies placed above the old buying in here, like we saw from yesterday. Now this almost looks like the same exact setup we got yesterday. If you look at the, we'll go to the 15. Parent dealing range retracement, sweeping out internal range buy side liquidity, which is literally exactly what we got, right? So on a normal day, you would like to see expansion lower into the sell side, but since we did run it out, I believe on, yes, yeah, we ran it out by a substantial amount. I'm not entirely sure that we'll want to continue. Instead, I do want to see more of this gap worked into, get a retracement up into here. Now, if you look at the daily, we also are wicking off of this again. So I don't know if we'll close back below, especially since we just wicked off of it. Let me click the weekly as well. Preferably, I wanted to see this gap fill on the weekly, but it looks like we're just going to get an inside candle. It's definitely still possible with NFP, but something to keep in mind. I'll switch back to the hourly on this chart. Another thing I want to point out is this is ES. We've got the, excuse the annotations, New York AM high and the New York, or the London swing high up here as well. Let me turn these off. There we go. Just wanted this on for the week because it's quite large. I don't want to annotate it manually. Yeah, so just waiting. Let me double check financial juice and make sure there's no news that we're missing. 9:45. Well, nothing there. We had composite PMI, whatever that is. Then we have PMI at 10 a.m. and then we have oil inventories today at 10:30. So if you're trading oil, it's going to be low probability. We can take a look at it. I'm sure it's already dumping off prior to the news. If you want a good one to study, if you want a very clean market, obviously today's not a good example, but if you want to learn the stages of price delivery and clean market maker buy models, sell models, when oil is in a high probability day, this is one of the best markets I think you can learn on, besides the indices. So in the retracement stage, I want to see just a wick past this point here. I know we're tapping to the order block, which is what I wanted to see right in here. You're tapping to the high end of this. But at the same time, this almost does look like a reversal pattern up in here. So with the news at 10 a.m., I'm not going to try and predict it. See the respect off the order block as well. I want to see it climb and close above the gap. So let me make sure I send that to predictions as well. So news at 10. Nice expansion out. So watch how we fill with this gap. You got consolidation in here, expansion. Got a BPR technically right in here. Now if you close above, tap back into it. We got 2 minutes 1 minute technically till the macro. So we're out of the retracement stage of delivery prior to the macro. So it's possible that we get a decent setup to form, but excuse me, this to me looks very low probability. I mean, like, we're also very misaligned. Wow, I didn't even notice that. So huge misalignment, and as always, that is a low probability market, right? So indices not aligned. So definitely won't be taking anything until we get paired up. You can look over here in the quad chart. Let's clean this up. NQ's at their, or YM over here is approaching their 650 lows. And if you look on the left side of the screen, you can see that 650 low, both annotated on ES and on NASDAQ. So we just ran it out on YM. We have clear expansion out of the range on NASDAQ, which is the bottom left. And if you look at ES, which is the top left, we're basically just chopping within the range. All whilst DXY down here is popping up or tracing into their fair value gap. So here is where I would like to see DXY maybe, I don't know. It's very hard to tell. Let's look at the 15. Got an order block in here. It looks, we're definitely in a sell program, right? And we have, did we retrace into 50% of the dealing range? We did. So we traced into 50% of the dealing range. I'm liking it to pop up here. I really don't know. It looks 50-50 to me, especially with indices like this. We got a nice drop off here. And we turned into 50% of the dealing range. And if you look at the lower time frame, did we sweep out any short-term liquidity on the left side of the curve? We did over here. So it's possible. We'll put an alarm above the swing high here. So if DXY pops up, you'll see a large retracement lower into going to indices. And you can see there's a 50% that I called for, right? So got 50% of that. Your game high to low. There's your 50%. This blue line, I don't know if you can see it. So retracement stage of delivery prior to the news, as expected. Now you just gotta wait. Now you have a mitigation block technically in here. If this swept it out, if it was cleaner, then I would have liked to seen. But you can see even here we have a, what is this? Reversal block. I don't know why it's slipping my mind. Oh, rejection block. Thank you. Yeah, rejection block up here. Rejection block up in here, and then you can see we did close back below. So consolidation, expansion. You have technically, we didn't sweep stops, so it's a reverse. So this is a retracement, right? So now you can expect the three options. So expansion, retracement, or reversal. We didn't sweep out stops. So you either see expansion here or retracement back into these fair value gaps, and then either consolidation or possibly another expansion leg. So this is expected. Let's look at ES. Fair value gap in here. Should see that respected. You can see the SMT at the highs up in here, right? So SMT at the highs from 849. Here's your 939 run out of the buy side. Here is the same thing. Actually, no, never mind. 849 is over here. So we actually don't have SMT divergence. Here's your SMT divergence. Weak, right? We'll just stock NQ for the time being. So here's your retracement. Now we're expecting either consolidation or expansion. So consolidation in here, expansion, retracement. Now you'll see expansion, reversal, or retracement again. We're gonna be waiting for the 10 a.m. news, so I'm not. I know it's macro time, but I really don't want to take any positions here. Let's look at DXY. See DXY starting to respect their 5-minute gap in here, right? But we also returned into dealing range discount of the parent dealing range on DXY. So if we take a look, we'll quickly cycle to it. 15-minute chart. Here's your parent dealing range. Don't think we dipped all the way from this one. Oh, we did. Oh no, we just tapped it. But if you take this one right here, now if there was a clean low here, I know there's a low right here. Let me take this off so you can actually see maybe. There's a low right here. If there was a clean hourly gap in here somewhere, there's a bit larger one down here we didn't tap into. A tiny one here. But if you look at the 15, there's no real clean swing low and no clear fair value gap to retrace to. But if there was, then that's a parent dealing range retracement into a fair value gap with a swing low above it. That would have been, you would have seen external range expansion. So expansion up into here. But to me, this almost looks like a reversal point. So you could see the swing low down here. If you see swing low taken out, that'll mean upside for the indices. But yeah, it's still low probability. I'll have to wait for the news just like yesterday. So bullish closure up into the fair value gap. I'm expecting it to drop off here. I'm tempted to take a short, but I'm not going to. 20 points. Can't really see it. Remove this. You get the point, right? Trace into the 3-minute gap. Respected it with the order block. Candle buys closing above the order block. And into discount of the dealing range. Close above the old buying. Old buying in here, closing above. Nah, I should have taken that short. Is that 20 points? There you go. There's your 20. Stay disciplined. Let me clean this up though. Now if you see a closure, there's no old selling really in this leg here. I guess you could use this, but we did return back into it, so got news here at what, 3 minutes or so. Then once we get the proper draw, it's pretty easy from there. Now if you go to the 5-minute dealing range, high to low, would be right into this gap roughly. So mark this out on your chart. In case you want to return lower, that would be the target, I assume. Let's look at the 3 again. So candle buys are still all closing above the fair value gap and above the order block. So it just looks like we're just in the retracement stage of delivery. If you look at the 3-minute, right, we're kind of just consolidating as well on the 3. So remember what I said yesterday and the day before that? Whenever you see the consolidation, you want to stay on the consolidation time frame. So until we see a clean break out of the consolidation, So for the expansion move, you want to stay on this time frame because it's a lot easier. If you look at the 1 minute, right, we'll get chopped up like we did on Monday. It's good to just stick to the higher time frames. You can see it's clean consolidation in there, right? Which makes sense because you have news which should bring in volatility. And if you want an expansion leg with the news, you need to have a stage of delivery that can shoot towards expansion. So you need to either have a retracement, reversal, or consolidation. There can't be another expansion leg, right? So you can always expect price to pause in a sense, or slow down before a high volatility news is released. That's kind of why you'll see that consolidation. So let's go to the 3 minute. Actually, we'll watch the news on the 1 minute. So here's the news. Not nearly as much volatility as we saw yesterday. Still some volatility though, right? You can see that. Now if you start closing below this, I apologize for the annotations, but if we start closing below there, which looks like we're doing, there you go. So I would look for value gap to form in the 1 minute. If you look at the 3, here's your expansion leg. So we could return back into the order block. Let me remove some of this. So favoring downside, watch this sell side liquidity pool down here. If we can, I want to see it close. Obviously we have short-term sell side right here, which for sure should be hit. But I am watching this as well. So return back into the order block on the 1. So you could use that order block as an entry point. Look at the 3 minute. Even the 3 minute's not closing though, that's not a problem. I'll just put a demo trade on there. Stop loss above. I'll go mean threshold of this sibi. But tapped nicely back into the order block there, into the inversion for value gap and the inversion in here, right? So inversion for value gap. I want to see it close past below the breakaway gap and into the short-term sell side down here. And then look for, what was that, 417. I'll take a screenshot of this really quick, put it to prediction chat for the boys on tier 1. Still looking for that gap down here. Obviously this would be the short term. We did already, there's 20 points, so could also take partial at that breakaway gap, but I'm still expecting expansion lower. What is that below? 719. So chilling so far. Obviously you could take partial. Well, I'm going to move stop to consequent encroachment of this wick here, which is back basically to the low end of this inversion for value gap. But first partial for me, you can take it in a breakaway, you can take it in here. This is just a bisi actually, no longer breakaway gap, since we did reach the buy side. So you can see the old selling in here. Great example. Old selling right in here. Let me do this to the right. Close below with this candle with the news. Wicked back up to the inversion. Close below the old selling. Close below the old selling. Here we're gonna fill this gap. There's your gap fill. we should respect this order block as well. So the stop is above the old selling line, roughly around where this this wick is. Okay, so I'm fine with it returning up into here and getting stopped out, since I do think that, so you can see the IO fed in here as well. Since I do think we'll return quickly into that sell side, and I'm going to take partial here. Thick line. Let's go to the 15, you can see a bit clearer. So 15-minute chart, I'm looking for the retracement back into dealing range discount. So back into, I mean, you could actually, if you want, 14.711 would be the range. Parent dealing range discount. DXY is popping up, which is a good sign. There's a closure below the gap, so good indication of bearish price movement, right? Now I would feel comfortable here placing the stop to this swing high. As long as we can close bearishly below this gap once more. I'm going to wait. Exactly what I want to see. Looking good. So I'm moving to stop just slightly into profit, but more importantly, below this old selling line at this swing high where I think this gap should be left closed below. So nice closure there, and should see expansion now. Magic, if you ask me. So 14.711.75 is that 15-minute daily range discount. Now you could see the 645 low as well. Filling more of that gap. Now this is why you can take partial here at the bisi, right? We're already in 20 points of profit, and you have a point of resistance that could cause reversal. So something like this, right? So if you want to take profit there, that's completely fine. Tapping into the order block here. And look at that. Candle closure tapping, or we tapped into the order block, candle closure right into the gap. So all of the objectives for retracement have been met. So if you see now an expansion back above this swing high, I'm perfectly fine with getting out, right? So it's above the order block, above the fair value gap, and mostly in line with the old selling. And look at that. Nice expansion lower. Now if you're really tight with your stop, you could move it to this swing high, which I'll do it just for the demo purposes. You want to see a closure below this bisi. So once we see a closure below, that's a bearish closure. I do want to see this next candle close below the gap, preferably also below this hourly gap as well. Hourly chart's looking good though. ES definitely weaker than NQ right now if we look at the hourly charts. Here's our expansion leg lower. I want to see it close below that bisi. Once we close below this old selling as well, we should see expansion. And there we go. Sell side liquidity. Almost exactly the same trade we took yesterday. I mean, you know, all that selling pressure in there definitely moved the market, man. GG's. Yes, sir. Still looking for the downside movement into this gap with the sell side liquidity pool here. But there's the entry and exit. I'll screenshot this, send it to futures trades. Like look at the picture from yesterday and look at the picture from today. They're literally almost the same exact entry and exit with the news at 10 a.m. I'm low-key kind of liking these news days now, especially because it's easier to see what's going on once you understand the retracement delivery prior to it. And then look at that. Popped into the fair value gap in here. I was tempting to go short, but we stayed patient. Then nice wick lower, close below, perfect wick, and I was late to the draw again, but into the inversion, down at the sell side now. I'm still expecting the sell side down here. Yeah, news definitely isn't a bad thing, for sure. I think sometimes it's made out to be a bad thing, and as long as you can stay patient, it doesn't matter, in my opinion. I think getting in before you know where the news is going to go is sometimes a poor decision. But yeah, news definitely isn't a bad thing. In fact, I'm pretty sure ICT teaches like you're supposed to navigate using the red folder news as expansion, right? So a lot of times he'll get in using the news as drivers. Obviously, CPI, FOMC, and NFP are exceptions to that rule, but stuff like yesterday, you definitely could have just got in before the news. Today, even if you understand the market structure there, I wanted to see this ran out. If we saw this ran out and then another return lower, that would have been a perfect 2022 model in there, right? Perfect reversal. I mean, we tapped into the rejection block, but we didn't see it ran out. I don't think. Yeah, YM didn't rain it out either. But I mean, you still had SMT at the highs, so bearish indication. Now, if you're holding a runner stop loss, I think would be above this gap here, or not this gap, this high, this order block high that we just tapped into. That's fine. But if we were to rain that out, I'd be fine personally with taking what was that, 30 points, something like that, 50, no, yeah, roughly 40 points, 38, something like that. Turning back into the inversion for value gap, so this bisi is now inversion, right? And we also into the discount end of that gap there. Everyone convinced it's algorithmic now? I mean, come on, that's 2 days where it's the same exact delivery. That should be very, very evident that it's algorithmic. So still tapping into here. Yeah, I would have dragged my stop into that high and be fine with the stop out if we get stopped out here. Note the relative equal highs up here. Okay. Note these. I am watching this partially because this to me looks like a reversal, especially since we have a breaker in here. I'm watching these highs now since they were kind of left relatively equal. So it was at 14, 8, 40, 34. I'll screenshot this and send it to predictions chat as well. So I'm watching them. I don't know if we'll get all the way up there, but I am watching them. And especially since we're starting to disrespect some PD arrays in here. Now watch this. Let me clean this up. You understand? So order block in there. This is what I'm watching. This breaker in here. Okay. If we close above it, I wanted to see it close above this swing high, preferably. So this swing high right here. There we go. It's looking good. Tap into the breaker, watch that, and then expansion. Okay. So there's your closure above. No fair value gaps on the 1 minute. I'm sure there's nothing on the 2. Let's see if we can get a tap into the breaker. We just tapped into the wick. I wanted to see a body tap. I'm tempted to go long here. We'll just watch it, to be honest. Closed out the contract on the other position. I had 2 on the other screen, so I can send a screenshot of that as well. Let me do that quickly. So I was holding it for that 14,711.75 down there. We were tracing into a higher time frame. Yeah, so tracing into a higher time frame. Sibi in there, right? The 4 and 5 minute are unfilled, so that gap in there. So just watch it. I'm not saying we'll shoot up into there, but to me, if we actually had returned into discount, I would like a long off of this breaker. But we didn't, right? So, and there's still some downside targets I want to see attacked. But I mean, if you look at this, it's technically parent dealing range, subsequent dealing range. Ran out short-term source of liquidity, dealing range discount in there. But yeah, it's 50-50 in my books. Let me put that screenshot up in future trades. So I'm just watching it now. So you can see already closing past where you would want to see the breaker respected. Typically you want to see breakers just 50% of it, tapping into it and then accelerate off. This kind of wick all the way down to the inversion here, the bisi. Kind of evident that we just want to continue to the downside, especially since ran out that swing high here. I'm still looking for 14,711 now, especially if you can close below the breaker. Yeah, there's a close below the breaker. So we're outside of a macro zone, right? We're still in silver bullet, but outside of a preferred macro zone. So a lot of the stuff in between those zones, one, you have to stay patient, because if you have a time-based model or even a stage of delivery based model, everything in between those stages of delivery you're looking for, or in between the time-based elements, is just noise to you, right? You're just tape reading it. There's no point in entering and over leveraging. And then when you take a loss, you keep over trading, and all those symptoms start to show, right? So you just want to watch price. Watch price, see what it does, see what it respects, where it wants to go, what it's filling. Then when you get to those time-based elements or the stage of delivery, you know exactly where it's going to go. No point in getting, especially since there's basically like two sides of your brain. This is what I think about it. You've got the analytical side of your brain, which is your ICT version, right? So you're understanding where price is going to go based on what you've seen in the past and what you understand from your learning. Then you have your emotional side of your brain, which is most commonly seen where you over leverage and you're just staring right at your P&L and you're waiting for it to tick up or tick down, and you want you're enforcing your will onto the market, and you want price to go to a specific zone. Soon as you get into that stage of your mental, it's very, very hard to learn from price. You can't see it clearly. You want every PD array in your favor to be respected and every PD array in the other favor to be disrespected, even though that may not be what the market's showing you, right? So it's good It's very good early on, but even when you're intermediate and advanced in ICT concepts and trading in general, to stay flat in between um, your models, right? You don't want to be emotionally involved in the market and have some risk on the table because you won't be able to learn it as effectively as someone who's just watching it with nothing involved, is just watching it just to watch it, right? And they're just taking everything into account, seeing how price is going, and then when the model shows up, they have all that information stored. As soon as you're emotionally involved, all of that analytical data, at least from what I've seen, if you're over leveraged and you're like trying to enforce your will on the market, you won't see what the market is telling you, and that's detrimental to trying to grow as a trader and trying to actually take a real trade that is in line with your model. So for me, I'm not gonna try and um, trade the silver bullet. I knew I used to put some trades on during silver bullet, but I've been focusing more on just those strict 20-minute, 30-minute time intervals, and I've seen great success with that. So I'm gonna stick with what's working. Um, but that goes with anything, right? So if you're just trading the 2022 model and you see a, um, I don't know, a silver bullet or a breaker formation or something that's outside of your model, and you're like, oh, might as well just take this trade. You don't realize, I mean, whether it wins or loses, it doesn't matter. If it wins, it actually hurts you more because then it reinforces the theory that, oh, I should keep doing this, right? If it takes a loss, hopefully you can learn from it. But then if you take a loss and it's outside of your model, sometimes that can start another emotional chain of over trading, over leveraging, and eventually blowing up your account. So it's good um, to one, identify those emotional paths that sometimes you can go down when trading. Preferably if you can see them and write them out, and then write out what steps you want to take to mitigate that emotional side, right? It's all about discipline, but I think the first step of discipline is first understanding what your mind's going to turn to as soon as something goes wrong. Because a lot of times it's identifying that step, and then when you're logically thinking about it. So outside of the market, if you can identify those steps of this is what I'm going to do if I take a loss, this is what I'm going to do if I take a second loss, this is what I'm going to do if I take 2 wins in a row. Okay, if you can think of all that logically, then when you're actually in the market and you're more emotionally invested, if which you shouldn't be emotionally invested at all if you're in a position. You should have low leverage, so if it wins or loses, it doesn't matter. That's a separate topic though. But when you're in the market and you're in a position, whether you lose or win that trade, you need to have a solid plan that you can follow. A written plan written or typed out doesn't matter, written or typed out plan that you can follow. So then when you start slipping up and you're like, oh, maybe I can take this trade to mitigate that loss. If it's outside of your rules and you break it, you know you broke your rules. If you have just kind of a general, like, oh, this is what I think I'll do, or sometimes I'll do this, or it's not written down, then you're going to break it and that's going to delay your progress. So if you do not have a written set of rules, a written set of rules of engagement that you're doing in the market, please go do that. That is something that you'll find great benefit in doing. And obviously a lot of people will just have this. If you're more advanced, you'll just have it written out and eventually you'll just develop it into your own discipline and your own practices, so you don't need it to look at it every single day. But when you're starting out, it's very, very nice to look at that physically, especially also to look at, this is why journaling your trades are so important, right? So if you can journal your trades, especially if it's a specific model. So for the 950 macro, I'll use this as an example. If this provides me a loss, um, I'm able to go back. First of all, if it provides a loss, that's fine. You have to understand that, okay, that's fine. It's normal process of trading, right? You're going to take a loss. You have to understand that. But then if you can go back into your old journaling and your old back testing, and you can see, okay, this is where it played out, this is where it played out, this is where it worked. You can see all of those times that it worked. You can remind yourself, okay, there's nothing wrong with the model. It's perfectly fine. It just provided a loss today. And you can move on from that, right? But then as soon as you think you're owed a win, so if you take a loss during your specific model, whatever that is, so silver bullet, if you take a loss during that time and you think you're owed a win, then you'll try and go back and overtrade and over leverage. And then that's where you can see, your account blown up. or your failure challenge or whatever it may be. So I think it's very, very important to have those elements written down. So you need to have a rules of engagement written down. You need to have your model strictly written down. And if you can't fit your model, ICT says this, if you can't fit your model on a note card, then the model's too complicated. So you should be able to fit your model on a note card, right? So an index card or something like that. So have your model written down, have your rules of engagement written down. So what you do after you take a win or a loss, or a second win or a loss. For me, if I take two losses, I'm not going to do anything, right? Partially because I only have 2 to 3 time windows I'm looking at, 9:50, 10:30, 10:50. Those are the only really time windows I'm looking at trading in the market. And I know the PM session for me is not something that I'm as effective as tape reading as the AM session, partially because it's just what I've been doing for so long that it becomes pseudo memory. So you want to get to that point where you're confident in your ability of placing a trade, but also confident in your ability of taking a loss. Because if you think about it, all the solid traders are all very, very, very good at taking a loss. That's like almost what they're great at. You want to be almost better at taking losses than you are taking wins, because you don't need to know where the market is going to make money, right? This is something that Mark Douglas teaches. You don't need to know where the market is going to make money, right? Because any Joe off the street could literally just put a long in, and if the market's already in a buy program, he's going to make money, right? He has no idea what's going on. So as soon as you understand that, whether you take a win or a loss, it doesn't matter. The probability state that you should take a win, assuming that you're entering based off of your model, right? So if you have an 80% win rate, there's an 80% chance that that trade is going to play out. But you have to understand that 20% is still that 20%. So if you become very, very good at taking a loss, that'll make you a great trader, right? If you can take a loss and stick to your rules and walk away from the chart once you take two losses or whatever that number is for you, um, that discipline that you build, obviously discipline you build outside of trading is important too, but that discipline you can build in trading is so important. It's one of like that's the thing that'll make or break you as a trader. If you can't stick to your rules, if you can't apply the past experiences that you had of blowing up accounts, of taking large losses, of taking multiple losses in a row, and apply that to the current day, then you'll have to keep on learning those steps, right? You have to learn those steps until you reach a level where you're like, okay, I'm gonna keep doing this, or I'm gonna not keep doing this. I'm gonna stick to the rules that I wrote, and hopefully you can learn something from that, right? So all of those things are important. I think, in my opinion, once you get to a certain stage of understanding price action, 90% of it, I would say maybe 80% of it is no. We'll say 50% of it is waiting. Another 40% is your psychology behind waiting and in the trade and after the trade. And the 10% is just the tape reading aspect, right? Because once you get comfortable with this is just second nature to you. You see exactly what you need to see. But then once you get confident like that, you need to be very, very aware of your own, um, mental state of confidence and when you're in and outside of a trade, right? All that to being said, um, I think it's very good to journal and have your rules of engagement written down. So that's all I want. I want to kind of a spiel there, but hopefully it resonates with you and you're able to take something from that. Um, while I was talking though, the price has not been doing much, so I'm not too worried about that. We have a tiny market maker sell model in here, so watch the swing low, expecting to be taken out, as well as the sell side liquidity from down here. So I ran out the buy side short term, traded back lower, traded into a fair value gap in here, as well as the um, order block in here technically. Watch that swing low now. I'll screenshot this and I'll send it to your prediction chat really quick. Do use a software for journaling. Yeah, so I use Notion. I'm sure a lot of people are familiar with that. So there's your sell side right there. Um, I use Notion. It's just it's nothing fancy to it. Yeah, Notion, exactly. That's how you spell it. Um, it's very simple. It's not anything, it's like nothing really trading related. It's kind of just more like a work school environment kind of software, but I see great benefit in it because it's very easy to basically like categorize things. So I'll send a screenshot of my Notion really quick. I have tons of stuff. I have a calendar in there. I have a rules of engagement tab. I have a model tab. I have a backtesting tab, and you can subcategorize things. And it's very useful as well if you want to journal your trades. So look, you can see. I'll send a screenshot really quick. So you have like different pages there, and each of those is a separate page of backtesting. So it's easy to categorize stuff. I do have my rules of engagement also in there, written down, but I also have um, a written copy on pen and paper, sometimes in front of me, sometimes to my left. So I think that's also nice to have. Can you walk us through the steps using the 4 types of rules based on the video you posted yesterday? Yeah. So are you just saying like the order, like the order of delivery, or do you mean something else? Watch this sibi right here, by the way. Sibi with an order block. Sibi order block right here. We also just ran out the short-term sell side, so expect price to kind of chop around here. Let's look at still kind of in consolidation here on the 3-minute. Hold that thought, SSDHI, SSDAR. I want to see now what price is doing, especially since we're in the macro time. Might get a reversal down here. Watch the buy side, short-term buy side up here, especially now we're in the breaker. Breaker in here, right? Can move this one. Watch this breaker here. Maybe a breakaway gap. Old buying in here, right? Left side of the curve, so watch the buy side. 1030 macro. So watch the buy side up here potentially. One tap buy side relative equal highs. Let me put this in predictions chat really quick. Watch that fair value gap in here as well. If we tap into that fair value gap and the breaker, it's a nice long. Let me try and get this order block out of here. There we go. So watch that. We'll put a long limit right at the breaker there. Probably gonna run out this high and low. Anyways, just watch for upside expansion here. But to go back to the question we had, so we said, what are the 4 types of rules based on the steps based on the video we posted yesterday? So, so there's the 4 stages of price delivery. You have consolidation, expansion, reversals, and retracement. So if you go to the Q&A section and then go to a successful model, there's a screenshot. If you scroll all the way down, there's a screenshot from Infinity Trading. It's not my picture, so all the credit goes to him. But if you look at that picture, that's the steps that price goes to. So it goes from consolidation always to expansion. Then expansion either goes to retracement or reversal. Then from those two, it goes back to a combination of any 3. So it could go to expansion, reversal, or retracement, any combination of there, and then back to consolidation. Watch this for value gap in here. That's also in line with the wick. Did I not get filled there? Man, maybe I missed it by a tick. Whatever. 20 points up from there. About to already get it. No, I'm kind of mad. Missed that fill. Whatever. So yeah, so those are the 4 stages of delivery. If you look at that picture, actually I can send it into the chat there. So look at this screenshot here. And then I mentioned the stages. I mentioned this. Okay, that. So I mentioned the stages. There's your short-term buy side as well. Watch expansion up to 14,834. What was I saying? Yeah. So the 950 macro has 4 different types of entry points. You can using the different stages of delivery. So I'll personally send you a picture of the notes. I sent it to a couple people yesterday, and if you're interested, shoot me a DM. I'll send it to you as well. Um, but I was writing this down. It's also in the video for like a split second. I put it up on the screen, but it's kind of generic, right? So if you have consolidation, you're always expecting expansion, right? So you'll have an expansion entry, so you can use either an order block for value gap or a combination of the two and use that as your entry model. Then you have a reversal, which is you're targeting the opposing side of the dealing range, that liquidity pool, right? So you can use the first PD array after the reversal point. So that can either be a breaker, an inversion for value gap, or for value gap in general. You're going to target the opposing side of liquidity or the 20 points, okay? And then if you're also in that reversal stage, that's a change in the state of delivery, right? So you're going to be using the old buying and selling for strength and weakness. So like we saw here, right? Wasn't technically a reversal stage, but I mean, if you wanted to use this low to this high, technically it is a reversal, right? But we use the old selling there, we close below it, old selling here, we close below it, and then we continue lower. So that's what you want to see. Now, if we're already expanding, going into the 950 macro, then you'll use a retracement for value gap as your entry point. So if you see like large expansion like this, so if we didn't have any news and this was at say 940-ish, and you saw this expansion upwards, and then say this is 950, then use a retracement down into the range, either into 50% or into fair value gap, then use that to go long as we continue to the untapped liquidity. Now, the important thing to use when you're using these stages of delivery is you need to understand where the draw on liquidity is. ICT mentions this, but it's very, very important, especially when you're trying to use these stages. So if you don't know where the draw on liquidity is, whether that's 50% of the dealing range or a swing high or swing low or for value gap, you need to understand where price is likely to draw to. That's the most important thing. And then using these stages of delivery, you can anticipate an entry point towards that draw on liquidity. Make sense? And then for tracing prior to 950, so like we got here, tracing back into this short-term dealing range into 50% prior to the 950 macro, then that's typically your news, the news driver. Okay, so you'll have news at 10 a.m. and it's just retracing into basically into equilibrium. So then price can be manipulated up or down. Okay, so you either will wait for the news at 10 a.m. and then you can go in and enter off that like we did today, right? Waited for 10 a.m. Here's your 10 a.m. candle. Waited for it. Saw it was breaking down, targeting sell side liquidity. So that was my draw on liquidity, right? Technically, the draw was down here. I wanted to see this fill. So this is my overall draw on liquidity, but we took partial at the closest low-hanging fruit objective, right? Here comes the buy side, by the way. Old buying here. Left side of the curve, right? Old buying. Preferably this is left open as a breakaway gap now. So at a minimum, oh, that's not a breaker. Breakaway. Okay. This one. This is mostly left open, okay? So watch the swing high, potentially back up to the order block of the hourly. So this red line up here. New week opening gap quite higher. But I would like to see external range expansion now. So either back up to the order block or into the new week opening gap. Yeah, yes, if you have the news, you have two options with the news. You either enter late, so after 10 a.m. So you have basically a 10-minute window when you're still in the macro after 10 a.m. and you can still enter towards the draw on liquidity. Or if you're very, very confident and very accustomed to what the news is supposed to deliver, then you can enter where that retracement stage is. So I'll send you a picture of the notes. Let me do that really quick. And then you can basically take that and apply it to the 1030 macro as well, which is kind of down the rabbit hole. You can basically just predict where the 1030 macro is supposed to go based on the stage of delivery that the 10 a.m. reversal happened or stuff like that. I'm not going to get too into it, but if you're interested in learning about that, I'll send you the notes. I'm still trying to backtest more and try and get like a solid prediction down because it's definitely something you can do. We already got that whole internal range liquidity being swept out and external what is it? Parent dealing range retracement plus internal range liquidity sweep equals external range expansion. That was just something that I just found. So I'm sure there's plenty of equations like that 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 we can learn. I'm going to try and do more. I have time today, so I'm going to try and do more back testing. If you guys want, we could probably just do it publicly. I'll just open it up on the public stage, and we can just all back test in there, something like that. But I'm trying to find more equations like that where if you have a combination or a line of those like steps that the algorithm follows, what happens next? Here comes the buy side liquidity rate. Got the old buying in here, no claim, no closure above it. Got one tiny, or below it, I mean. Got one tiny body right there, but should see respect to this order block in here. And then a run out of the buy side. So watch the order block in there. Breakaway gap randomly left open. Here comes the buy side. Now obviously it's going to go further past this, up towards the order block. I did get filled on the other screen, so I'll take a picture of that as well. There it is in futures trades, and here's your expansion up towards the hourly order block. 1030 macro. There you go. So add that to your backtesting. There's the expansion past the buy side as expected. What was I saying? Oh yeah, so the equations. So yeah, there's definitely equations where you can figure it out because you basically want to, the goal is you want to find all of the variations of the expansion. So what does price do to get to a large expansion range? Because you want to basically be in the trade where price is expanding, right? You don't want to be in a trade where it's about to reverse. That's poor timing and poor understanding of price action. You want to be in a trade when price is expected to expand towards liquidity, right? So we had reversal up here, expansion. We're already in expansion, like, excuse me, and we're looking for liquidity. Here, swapped out liquidity, purge and revert, traded back up. We trapped into, I think we wicked into this. What's the low on this candle? 773 even, and you have 772.7. Yeah, that's kind of, I put the limit order and we didn't get filled, whatever. Still got filled on the other chart, so I'm happy with that. But yeah, you want to find places where expanding, right? So we got nice expansion here. And from what I've seen, the expansion is timed, is time-based, right? You always see expansion a lot of times within these macros, within the time element. So all that to say, there's different, I hope you got that screenshot. I sent it to you. So look at that screenshot, and if my writing is poor, just let me know, and I'll try and clear it up for you. But I want to do another video where I try and go more in depth about that, because if you haven't watched the 950 in-depth guide, please go watch that. It's kind of more, it's like 30 minutes or 45 minutes, I don't know. Yeah, exactly. Low resistance runs. So that's what I'm saying. The expansion legs like this is definitely low resistance, right? A lot of buy-side liquidity isn't accumulating, and you have low resistance run. So you want to basically, I'm trying to find if there's equations that will equate to a low resistance liquidity run. Like what are the steps, or what are the scenarios where you either 90% of the time or 100% of the time will see an expansion either to external range liquidity or just quick expansion with no retracements, right? So everything is technically a market maker buy model and sell model, right? You can see it fractally everywhere. It's just a market maker buy model and sell model. But predicting those ones where it's cleaner is the difficult part. So yeah, I'm going to try and also work on the 1030 macro kind of stuff because I have a couple of rules down. Like if we have untapped liquidity and we had a 10 a.m. reversal, then you'll see a retracement entry. If we just ran stops from previous expansion, oh, actually we just got that. I didn't even realize I already had this in my notes. Well, we just got, if we just ran stops from previous expansion, so previous expansion from 10 a.m., it says reversal entry if it's confirmed. Here's your sweep of sell side into the breaker, and if we got filled on that, a nice break of structure as well. Market structure shift into the bisi by a tick, and that would be your entry. So apparently I already had this written down. I just didn't even realize. And then it says consolidation during post macro. Yeah. So if you're interested in that, I know I sent it to a couple people yesterday, but I'm gonna try and refine that down. Hopefully by this weekend, if I have time, we'll do a couple back testing sessions about those stages of delivery and try and refine stuff down, because I think that's kind of like the secret to ICT concepts. If you have a time-based stuff or time-based model and you understand price action, it's all just about stages of delivery, because that's the only 4 things it can do. If it can only do 4 things and you understand what it's going to do next, what it's already done, and where we are in now, it becomes very simple, right? So I've got the buy side liquidity run. I'm expecting either a retracement stage into this breakaway. So watch this now as a bisi. For the 1050 macro, kind of low probability in my opinion. You could see a retracement entry in here. We're already expanding, so watch a retracement and either pop back up. You can see the order block as well on the 15-minute chart. To me, this almost looks like search and destroy conditions, right? Like look at the 15-minute chart. High, low, high, low, high. If we come back and sweep this, if this liquidity is tapped again, don't trade the rest of the day. I mean, you shouldn't be trading the rest of the day anyways. It's NFP week. So this is kind of the last high probability session. Typically, you want to see 11 a.m. as the true AM session close. New York, London, or New York AM. That's like the true kind of close for me. That range between 11 a.m. and 12 a.m. becomes a little iffy. I think ICT also states this in the 2022 concept, right? He said from 9:30 to 11, then 11 a.m. to 12 a.m. is kind of that iffy zone. Then 12 to 1 is definitely not where you want to be trading. But yeah, I think that's 2 solid price movements, right? Definitely not time based. You can see the random expansion, all that buying pressure coming in at 10:30 up to the buy side liquidity. You know, standard retail stuff. For those who do London Open, I'm forward testing DAX. It's copy paste of the afternoon here on NQ. Well, yeah, there's that resource there for those who are interested. If you can send me that, I'm also interested. So shoot me a DM with whatever backtesting data you have. If it's a PDF or just some screenshots, I'd love to see that as well. We're tracing into here. So retracement stage of delivery prior to. We also just ran up buy side. So low probability stuff going into 1050 macro. I'm not liking as much. And here is your, oh, let me screenshot this. I didn't even screenshot it. Predictions chat. The LeBron James gif is too good. I'm gonna keep using that. Anyways, so yeah, I think we will end the stream there. I'm not expecting a whole lot from the 1050 macro. Let me put that in predictions as well. All right, there we go. Just had to type some stuff up. So, stream recording will be posted after it's done rendering. So, you can check that out once it's done if you missed anything or want to go back and watch something, it's there. I did post the trade from yesterday. I don't think I'll post this one. It's too similar to the one yesterday. You can just go back and watch it if you want. Tomorrow, I don't think I'll stream, just partially because I'm expecting price action to be really poor. So I don't really want to, bore you guys. If I wake up in the morning and it looks cleaner to me than it normally does, then we'll do like a shorter stream or something, or just like a Q&A. If you guys got questions or like just want to tape read, we can do that. Otherwise, it's kind of 50-50 if I'm going to stream tomorrow. Friday, you can't expect to stream though. Friday for sure I'll stream. So be on the lookout for that. So yeah, so if you have any questions or if you want any data that I mentioned earlier in the stream, feel free to reach out to me. I'll be more than happy to send you anything. So until then, until the next stream, stay safe, good luck, good trading, follow your risk management rules, please. And I will see you guys later this week. Peace.